Okay, my friends, we have come to the last module of the Build to Profile course, Module 12. What is a trade plan and how do you use one? As a final reminder, trading and investing involves substantial risk of loss. It's not suitable for all investors. So past performance is not necessarily indicative of future results. Be mindful of that. And as we talk about trade plans, what they are, what's included in them, and how they can help you win, I mean, this is always mindful of risk. We're thinking about risk in the aspect and approach of our trade plan. So let's dive in, shall we? This is going to be fantastic in that it's going to help you understand what is a trade plan, because you'll find lots of people talk about having a trade plan. They don't really show you what that is. I'm going to show you some really clear examples of that, what types of information that you would include in that, and then how you can use it to win when you're trading and investing. Well, okay, I'm going to feel like I put one foot in my mouth and the other. The idea of commander's intent is really implied in having a trade plan. So just like most battle plans change as soon as you get on the battlefield, most trade plans change as soon as you get on the battlefield. But it's the process of preparing that and thinking through potential scenarios, though you may not know which one will occur, that once you're on the battlefield, it supports better decision making. So, I find, even though I create plans every morning in multiple products that I'm looking for potential opportunities, and I even prepare plans for products I don't trade, but I know and can identify what's going according to plan, what am I in the flow of the market with, what's not working according to plan, and it helps me adapt and keep me present. Because one of the things that happens when you're trading and investing is that the brain is actually wired to fight you being successful. Things like the fear of missing out, things like confirmation bias, that once you get into a position, you will start looking for every bit of information that you can to tell you that you're right. This is why many people lose money in markets, because they can't admit when they're wrong. So, trade plan, getting out onto the battlefield and building a narrative. Why do we use the word narrative? Well, because really, whenever we're building a plan around the markets, because no one knows, listen, nobody knows what's going to happen next. And I've been looking the last couple of days, and I see people say, well, market's going to go do this, market's going to do that. They don't know. It was it was a year ago that a guy named Dennis Gartman, who's on CNBC often, said that crude oil would never trade above $45 again in his lifetime, and we have hit $65. Nobody knows. Nobody knows. So when you're building a plan, what you're doing is you're building a story. You're writing a story of what you believe the auction is doing. What is it telling you? So every trading plan has a degree of subjectivity to it. It's, and it includes things like, what do you think will happen next? And what do you believe will happen if what you first believed will happen doesn't? So having contingencies built into your trading plan are very helpful. One of the things that I always include in my plan is a bias. So I have in mind, what's the general bias as I approach the market? So who do I believe is in control of the auction? Is it buyers or sellers? And then which direction, am I going to lean in that session? And what behavior or price level would challenge that? Now, I'm gonna pull over a spreadsheet. So this is something that I create for myself, but really for developing traders who are learning how to incorporate the profile and day trade futures products. We look at 4 products every morning and we build plans around them. One of the things that's included in this plan is a degree of bias. Now, bias can be operating in multiple time frames. On this plan, I actually do consider a kind of an intraday bias. This pre-IB thing, that's some internal jargon. I won't go into a whole lot, but that's saying, until a certain condition is met, that's the bias. And then there's a swing bias, which is more of a multi-day bias. So you can actually have competing bias that basically says, I'm bullish up down to this level, but really I'm overall bearish. It's telling me that the auction's actually in a downward move that the sellers ultimately control, but for this specific session, I'm looking for it to be to the upside. And if I cross those levels, then I would start to question those biases. By having it stated up front and even setting alerts around it, it keeps me honest. It really does keep me honest. And anything that you can do in trading to help you stay honest is helpful. Especially, over the years, I worked with a lot of software engineers, extremely sharp people learning to trade. They build trading systems and approaches that are very robust. And because they're so good at building systems that are effective and efficient, when it doesn't go their way, they buckle down because they go, no, it's supposed to be right. And that's when they can really lose. So you have to have ways that pre-think setting you up to admit that you're wrong. You'll find that trading and investing is the great revealer and really the leveler of humanity. So if you struggle being honest about who you are in the markets will absolutely humble you. Zones or areas of interest. So on my plan every day, I have prices that I am interested in participating in them. Some of them I consider key levels. Some of them are areas that I'm looking for some type of movement. I set some shorter term levels of interest, some longer term, if we have a expansive day every day that I'm looking at. And these are levels that are, I pull these from the prior auctions to get a sense for where participants are at. And, I have also, areas that tell me where are clusters of value. These are areas of interest that I keep in front of me that, I can print this out, have this in front of me. I can have alerts set at these prices that helps me really focus on participating only at certain places and not looking for every little wiggle in the auction. These are, some that are both near time frame, which would always be the most relevant, but also weaker. Some midterm time frames are more relevant and show up on occasion, and then long-term time frames are most relevant. And when they show up, you don't want to fight them. So when, day to day, we see that references and zones from the prior session have the most influence, but you'll wake up one day and then you'll see a market really move. Well, it's going to go to the larger time frame. So in your plan, you need to have those in reference. That's why I have those larger levels in my plan so that I can reference those if and when we exceed the nearer term levels. Other things to think about zones. Zones can be targets that you trade toward, or they can be areas that you're interested in entering a trade around. So often when we're working alongside traders, we'll talk about making the market come to you. And a zone of interest can be a level that you say, hey, I am not interested in looking at that until the market comes to that level. And then depending on what time it does and the velocity and other factors, then I'm going to make a decision when it comes to that. That's putting a degree of influence and control over something that is often viewed as being irrational and erratic. So it's a way to get some control. Reference statistics. We have reference statistics on all of our plans. It's something I always think about, especially when I'm learning the auction and learning these products. It's good to have. One is the average trading range of the product, whether that, depending on the time frame that you want to trade in, whether it's 1 day, 1 week, 1 month. Why? Why is this important? Because if you're in a trade and you want to know, okay, what's the likely movement of this vehicle in the time frame that I'm in. Each day I've got both the average trading range for the day and also for the first hour that I keep in front of me as a way to know what's the range, the average trading range. Now, I also look at something that's an expected range that is generated off of the volatility. Also look at average volume. One of the things that I track every day was, hey, how was the volume for the day? Was it above average? Was it average? Was it below average? Like if I have a market that's trying to go higher and it has above average buying, then I could expect there's likely going to be some higher prices the next day. That would be a reasonable assumption, not a guarantee. There are no guarantees, but it's a reasonable assumption that I can lean on as part of my decision making. News. What types of news are part of your plan? It could be upcoming economic events. It could be holidays. It could be earnings. I just got a little spot here that helps me say, hey, I've got Fed speakers today. So be mindful of that. Sometimes it's earnings, sometimes it's an economic report. I think on this one, we've got a crop report that's scheduled that I'm keeping mindful of that. There was an economic report in this product today. I just keep those in front of me to know that there might be some degree of volatility injected in the market that I want to be mindful of. And then the other thing about your plan is having some degree of accountability. So every day when I get done looking at my plan, I will review. So I have a degree of review that takes place just to keep me honest of what did I say I thought was going to happen during the day. So here I'm building a narrative of what I believe is going to happen. Here's where I'm reviewing that, and I can review those and look back and forth just as an internal degree of accountability to say, hey, am I really getting my arms around this or not? One of the things that was really, really helpful in building confidence for me as a trader was building a plan every day. And as I kept seeing, like, man, this auction, this stuff is actually moving often in the direction that you think it's going to go. So trust that, lean in that, know where you're wrong, but lean into that. And sometimes this is just one view to look at it. Let's look at another type of plan. This plan, not as robust as the other one, but allows you to see a bunch of other products. And you can have multiple hypotheses on what you think that product's going to do. What's the general trend, things like structure, volume. This one I actually had a grade of, hey, am I actively looking at that, or is that something that it's not quite ready, but it's kind of on my radar? You can pick how you want to do that. Some people even just write them out. I've seen handwritten plans that people have in front of them. That can be effective based on who you are. But these are just a number of the things that I have in my plan and that I work with on traders that are working to develop towards independent competence. But the accountability can be through performance tracking, looking at, how, if it's a good plan that's helping you make better decisions, you should see better performance in your trades, plain and simple. So performance tracking is helpful, reviewing the narrative to make sure that that is working, that you're learning something. And then also, I can't stress this enough, trading and investing can be a lonely game. You'll often find that people think that they know what they're talking about and they don't. You'll find that there are people that have no idea what you're talking about, so you can feel lonely. But having a support network of either other traders or friends and family who you can be honest about what's working and what's not, that can support you. And my family can look at me and they know when I have a tough day in the markets. It's on my face. And they know when I have a great day in the markets and it's on my face. Fortunately, I have more good days than I have bad days. So, generally it doesn't impact me as much. And I've also, through talking with them, have realized how that's impacted me. And I'm watching how I'm showing up around that. So having a support network is very helpful. Even if they're telling you, hey, it's time to take some time away from the market. That can be part of your plan as well. Planning time away from the market. I take off every Wednesday that we have an FOMC release, the Federal Open Market Committee that adjusts interest rates. They do that about 8 to 10 times a year. They always release that on a Wednesday. I always take that day off. If it's in the winter, I will go skiing. If it's during the summer, I'll take an extended bike ride or go hiking up in the mountains. And it's scheduled, planned times as part of my plan to refresh me, to get me away from staring at screens and to come back with a renewed sense of enjoyment about this, which is, also part of contemplation practices, whether that be prayer, meditation, in some degrees, even fasting or solitude. They're great and treasured spiritual practices that can just help you ground yourself, center yourself, and really keep coming back to, who are you? Like I said, if you haven't heard it yet, you will hear it. People will tell you that trading and investing is the hardest way to make easy money. Some days you will feel like you are absolutely printing money, and other days it's going to feel like the pain never lets up. And the person who can survive the crucible of that has to be attuned to who they are. Stress is the great revealer of who we are as humans, and being able to recognize that, recognize where we fail, recognize where we still need work, recognize where we can bear up under burdens well, and having a reference point for all of that is great. Mindfulness practices are extremely helpful. So I encourage you to have that be part of your consistent plan, is you're spending time just doing some self-care, working on yourself, it will show up in the performance as you trade, and really you know, helps a plan toward grit. And this is all part of the accountability. If I had to say if there was anything else, one thing that I could point to that sets those who are successful in trading and investing and those who are not is grit and resilience to stick with it long enough until they get it. There certainly we can shorten the curve, right? This course is meant to shorten the curve for a lot of you, and I hope that you take it to heart and you do the homework. And even if you spend a couple months going through the homework, I guarantee you I'm going to save you time and effort chasing down other stuff that and then keep talking with us. You know, we can do some additional support around the concepts in here and help shore that up. But really, ultimately, whether you'll be successful or not is, do you love this, and will you keep coming back? You keep coming back and showing up, even though it's hard, until those days that it makes sense. You'll get to a place where the bell curve starts to work for you, and you just can't wait for Mondays. You're like, oh my gosh, can't wait for Mondays. But there's something to be said for this ability to show up every day and do the work and keep working until it works. Hopeful that what we walked through in these 12 modules has really helped shorten the curve for a lot of you. Maybe fill in some holes, maybe encourage you to think about some things you hadn't thought about before, and also put away some things that you've probably spent some time pursuing that you really don't need to be successful. Okay, here's your homework. So based on your chosen time frame and products of interest, build a plan for a coming week. You've at this point, you should be looking at some products, you should be looking at some levels, you should be setting some alerts, really kind of codify that into some sort of plan. Select areas of price that are interesting to you, define what you intend to do if and when you reach those prices. And then define what you will do if you enter at those prices that you have set. So like once you're in, what will you do? So here's what I'll do when I reach these prices, and what will I do once I get into those prices? And that also includes what will I do, if it goes my way? What will I do if it doesn't go if it doesn't behave as I expect it will do? Just clarifying that, it goes back to those 4 questions of, what's the opportunity I see? How much am I willing to risk? What will tell me that I'm right? What will tell me that I'm wrong? You can get better. You can get better at all of the answers to those questions, but just by answering those 4 questions to start, you're going to be ahead of the curve. Continue to review your performance with someone other than you. We're happy to be that. I'd love to get emails from some of you saying, this is what I've been working on, and this is how it's going. I'd love to get that feedback. We're happy to do that. If there's someone also in your family or friends or other traders that or people that are interested in investing, pull them in the loop. Don't do this alone, and it's going to be pretty great. Okay, next steps. Review the video. Complete the homework. As a final step, as you wrap up, build a profile, schedule a consult with our team. We'll send you a link. There's a link attached with this module. You would love to just kind of land the plane on this and talk about what's next for you. And that could be that we point you in directions away from us, and it also could be that you do some more intensive work with us. One of the ways that we do that is through what we call our development pathway. And we have tried to coalesce everything that we think about in the auction into really 16 modules that dive into how you can see and answer 3 specific thematic areas, which some of those we talk to even in this course. I mean, that's kind of in the simplistic way we think, but really, what are the 4 behaviors observable in every auction? How can you observe them? What are the 4 questions to ask before entering a trade? How to answer them? And what are the 4 stages of auction competency? And how do you know which one you're in? If you can answer with confidence all of these and know where they are and point how you would answer those, then you're where you need to be. And you'll be able to own your own future development. You'll be able to pick something up and say, oh, that'll be helpful to me. And oh, that won't be helpful to me. And you'll be very, very competent. And we do that those 16 modules going after those 3 focus areas. And we do that every day and every week by actually looking at specific trades. So one way is day trade plan, where we look, that's that spreadsheet I had, where we're looking at 4 futures products every day. They're diverse products, so it kind of gives you an idea that, hey, this stuff works on multiple different types of products. We talk about that and look at trades and talk about the modules and kind of wrap it all in one. We also look at swing trades, so multiple session trades. We still look at futures, but everything is applicable to other markets, whether it's ETFs or stocks or Forex. It's all applicable, and this is just helping further set that foundation. So think about that, schedule a consult, do the homework. Man, we thank you so much for being part of Build to Profile. And if this has helped shorten the curve for you, if it's helped plug some holes, if it has helped steer you clear from some rabbit holes you don't need to chase down, let us know. I mean, that's the whole reason that we put this together. We really tried to give practical insight and knowledge that we've learned, from years of being in the space and being in the industry, that, some of it we've had to learn the hard way, and hopefully that you'll be able to learn it in a much easier fashion. The hard work will just be putting it in place, but that's a better place to be for sure. So that's Build to Profile, helping you build a great foundation for your trading that is built to win, built to last. Take care.